Well, here goes nothing. The highly requested video, which I get in almost every live stream or every piece of content I produced. Jordan, what is your strategy? Well, I trade live in front of most of you. Most of you will already have an understanding on what I do and where my edge lies. However, I thought I'd finally deliver it. Guys, today is the day I am going to teach you exactly what I look for when I trade, the assets I'm trading, the time frame, my triggers, and how I manage the positions. This is it right here. If you're new here and you haven't seen TradeDelicious before, we are a brand new content company which celebrates what it means to be a trader or investor. That's right. No more hooter harder, buy our course, anything like that. No, we're here to literally celebrate the journey in which everyone endeavors to become a trader. We go from talking to trading celebrities, picking mindsets of outstanding psychological coaches, to tournaments, to challenges, a whole heap of fun. And we also do majority of our trading live here at TradeDelicious. So if that interests you, welcome. I welcome you with open arms. I think to get an understanding on what we're actually going to do today and the strategy in which I'm going to teach you, you need to understand who I am. So my name is Jordan. I'm a senior analyst at the 5%ers and Trade the Pool, which are two proprietary trading firms. I'm the director here at TradeDelicious, and I have been a day trader for a little over 7 years. It's been a long 7 years, but it has been a fun 7 years at that. I've been profitable for a little over 4 years, so it did take me a little while to learn. But this strategy really revolutionized my trading. This is a strategy I did develop myself from pulling different assets and different ideas from a range of different people that I've learned from over the years. I compiled it all into one and found and built a strategy really around myself, my personality, my time, my availability, everything. Highly recommend you do the same. I understand being here, you're obviously interested in learning about my strategy. It's not as simple as that, but I'm going to do my best to share with you everything I do, and hopefully you can learn from it. Hopefully you can take from it and potentially generate some profits from that. So without further ado, let's get involved. Let's start talking about this strategy. Let's not take up any more of your time, and let's get an understanding of what I do day in, day out. So let's get over to the charts. I'm here on TradingView on US dollar, Japanese yen. Okay, there's a few things I want you to get an understanding of with this trading strategy before we actually get involved. Okay, first things first. This strategy is aimed at day traders. Okay, so if you're a swing trader or an investor, this strategy may not suit you. You could take aspects from it and look at the higher timeframes, but the way and the psychology behind this strategy, I'm not sure it'll be overly profitable, but you never know. Okay, so this is aimed at day traders, predominantly sitting around Asian session, early London session. I have traded this outside of that time and it does work. I'm based here in Melbourne, Australia. I'm not going to sit up till 3 a.m. trading at night. It's one of the reasons I built this strategy, is so I didn't have to do that. So Asian session is definitely where my edge lies, with that lower volatility in the area. That's what I'm looking for. Okay, and then finally we're looking at the 1 minute time frame. Now keep in mind, yes, I trade on the 1 minute time frame. However, I have at least 2 days of data backing up my decision. As you can see on the chart right now, we are on a 1 minute time frame. However, you can see I'm so far zoomed out that I have a full spectrum of the past few days. I understand where people are trading over the past few days, and I don't usually zoom in too much further than this. So yes, technically I could trade on the 5, 15 minute or even 1 hour chart with this strategy, but I like to get a deeper understanding on where order flow is coming through by looking at those smaller time frames. Okay. Most of you know from our time trading together or from the live streams that the strategy and finding the entry point is the easy part. Why this may seem a little complex at first, trust me, It's the easy part. The hard part is knowing when to exit the position. Now, I'll touch on that a little bit later on throughout this video, and it's very important to understand that this strategy can be difficult to perfect. I still believe I haven't perfected the strategy. There is so much room for improvement, but I've gotten it to a point of profitability. Now, I'm going to share this with you knowing, and I want you to know, that this is going to be very hard for you to replicate. Okay, I'm going to teach you this strategy, but where the edge really lies in how you manage your positions. I'm going to share a little bit about how I go about it, but you can see majority of the time how I manage my positions live on TradeDelicious because I do it while I'm talking you through it. Anyway, let's get involved. What do you need in order to perform this strategy? Well, first of all, you need access to price action charts. Okay, so I'm using the wonderful trading view right now. You need access to the data, right? There's a range of different assets in which you can trade on this. I trade FX pairs or indices, but I make majority of my profit in FX pairs, specifically US dollar, Japanese yen, which is why I've chosen it today. I look pretty much across all assets when I'm trading these pairs. However, I have found my best success rate is in US dollar, Japanese yen, as well as the most signals which I get given from this trading strategy is in US dollar, Japanese yen. So with that, I'm going to use US dollar, Japanese yen as a prime example today of some trades which I've actually taken over the past month. So let's go have a look at the chart. What do you actually need? First things first, yes, access to the data, right? We want a volume chart down the bottom. I understand when trading FX pairs, it's CFD based, right? Which means we're trading based on tick volume. I still trade based on that tick volume, okay? I know. A lot of you are going to freak out about that. Look, when you're having a look at centralized data, when you're having a look at what you really can pull in the FX world, you get around an 80 to 85% hit rate based on the tick data. I will still go based off the tick data anyway. I've back tested it using tick data. I've forward tested it using tick data. I've traded it for the past 2 years using tick data. So I'm still trusting it in that aspect. So you want volume, which we do. Tick-based volume here in CFDs. And then we also want the volume profile. So I've got the session volume profile through TradingView here. You do have to have a pro account on TradingView in order to access this volume profile. If you do have it, it's a session volume profile. The only thing I've changed is the row size to 100, right? Just gives me a little bit more data, so to speak. Okay, so when it comes in at default, I think it's set to like 25 or 50. These bars which you get printed here are very wide. It's not very saturated or clear in where you can trade there. I set it to 100, so it just gives me that little bit more data I'm a little bit more comfortable trading with. That is all you need technically to set it up. Fundamentally, what do we need to know? Well, we need to get a deep understanding on the asset we're actually trading. We are day trading, sure. We are day trading based on technical analysis, yes. But it is very, very important that you have an understanding on what the asset is that you're trading. For example, US dollar and the Japanese yen. We need to get a clear understanding on the market sentiment for US dollar and Japanese yen right now. Do we have a Fed meeting coming up in a couple of hours? Is the Bank of Japan investing billions into yields? These little things move these assets like nothing else. And it can give you a clear sentiment. Yesterday, did the Fed hike interest rates? Is there going to be an increase in investors looking to buy the US dollar based off of that? These are things that we need an understanding of because we don't want to be caught on the wrong side of the market. And you'll understand, I like fading volatility here. If we're getting volatile events, these trades won't work. So we need to get a clear understanding of that. If you're new to looking into fundamentals, you're a little bit overwhelmed and you've got no idea how to pull everything together for that, TradeDelicious is your spot. Aaron and I love fundamentals. We talk about it all the time. And he's currently doing a lot of lessons twice a week teaching you about these fundamentals. So if you haven't already, head over to the channel, have a look at our videos, head over to the Learning Hub, or even subscribe here and join our live streams where you'll learn a lot more about it. Anyway, let's get into the actual trading setups. I've broken this down into 7 easy steps for you to follow. This is probably as easy as I can break it down, okay? 7 easy steps. First things first, We want to identify a market. We want to find the right asset to trade for the day. The way I do that is I look at the very start of the day, the end of the session, the very, very start, okay? You can see where we open up or where we close, right here or right here. What I'm looking for is a new day starting within the value area of the volume profile. So you can see these darker bars in between these two blue lines here. I want the next day to be opening within that day. This, very marginal. I realistically wouldn't look to be trading that day. Here, you can see we've opened up outside of that area. So I don't want to be trading that. But this day, on the 20th of April, you can see we opened up inside this value area, which means we have a valid asset, a valid pair, and a valid setup. This is the beginning, right? This is step one. Look. That's all we're going to do. We're just going to look for step one. Find an asset. So we found an asset we can trade. Step two from here will be to draw. We found an asset that could potentially give us a setup. Now we're going to draw. Jordan, what exactly are we drawing? Well, this is where we're going to use the volume profile. This is where we're going to get an understanding of where traders the previous day found value in these prices. More specifically, I really like looking at the ones outside of the main value area. Don't get me wrong, they're still validated inside, but I like having a look at the ones on the outside. I look for these key pumps. As you can see here, we had a pump here, 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 and even down here. These big areas where we have two crevices in between and a big push. They get smaller, obviously, as you go outside, but these do tend to be a little bit stronger. I pick the two largest bars within that pump, and I draw a rectangle, an extended rectangle from there. Okay, so that's my first area drawn. And then I'll go down through the same area. We've got one here. I like this one here. Over time, you'll learn what are good areas and what are bad areas. It's just a matter of learning curve. You go through all of these and you can kind of draw them up like that. Now, that right there is the session volume profile, the volume profile done for our strategy. See you later. Okay, we now have our areas drawn. We know we've got a valid asset. We're looking for it, and we've got different areas which we can trade around. What's next? Well, the next thing to do is wait. Have fun. How good's trading? We literally just sit here and we wait for price to come and test these areas. Now, in trading this, I'm looking to fade, which means I'm looking for a bit of an extension and then reverse it back around, a mean reversion, as a lot of people call it, right? I'm looking for a push away from the mean and then a pull back in. That pull back in is going to be my trade. So if I'm opening on one of these areas, it's not really going to validate it, right? If I'm opening on one and it's only within 10 to 15 pips of where I've opened, not really looking to trade it. So straight off the bat, these three bars right here, 1, 2, and 3, are pretty much areas I am not going to trade around. So we can go ahead and get rid of those. Gone. They're too close to the opening price for me. Now, we've identified a couple areas which have extension markets. We really need to extend in order to hit these prices. And this is where I find it interesting. What I'm looking for, okay, and now we're waiting just to see price come up, okay? This is where we transition into step 4. Analysis. What I'm looking for is an extension, a strong push. As you can see, we had right here, a nice strong push up into this area. Okay. Once I've identified that we're getting on a decent move up in the area, I'm looking for a drop in volume. This is where the volume chart comes into play. If I zoom in a little bit here, what I'm looking for is a drop in volume. So US dollar, Japanese yen, we've opened up in the volume profile area. We've got our areas marked out on where we want to trade around. We're looking for an extension, which we've gotten. Now all we're looking is for a bit of divergence in the volume, and we can look to trade this asset. Let's have a look at what we've got. We had a massive volume peak in these candles here, which coincided around 11 a.m. my time, which will be around the time the Nikkei opened up for the Japanese yen. This is why it's important to get an understanding of how these assets move. Okay, bit of a volume pump. From then, we just dropped off. We dropped off quite heavily in the volume. Okay, heading to the downside from that top pin while we continued pushing higher and tapped on. I would have been a little bit nervous and a little bit hesitant to take this position. While it is a valid setup, I would have been hesitant just based on that volume pump right there and then the flattening out post volume pump. Once we got up into here, we've identified, this is where we start to look to trade. Okay, we've identified an area. We've identified a potential position. We've done our analysis and it is still validated. Now we look for an entry point. There's two ways to trade it. You can be aggressive or you can be passive. This, for me, alters all the time, depending on how I'm feeling and then depending on how I'm reading the market. I'll either go passive or aggressive. In a setup like this where I'm a little unsure and not completely validated by, I'll look to go more passive. When I'm going more passive, it means waiting for a better confirmation, a break of structure, which we have as we break that low. That'll be my entry point. Okay, if I'm being more aggressive, I'm more convinced and I'm really feeling good about it, my entry point will be like on the dollar market order type stuff. However, if I'm a little bit hesitant, I'll risk a little bit less and I'll wait and get a better entry point. A worse entry point, but a more validated entry point. So in this case, I would look to be quite passive. I would look for the breaker structure. My stop will be over the highs and I'll look to trade this towards the downside. This is where the edge comes in. Finding a position, entering a position is easy. Anyone can do that. Where a trader really makes their money is how they get out of positions, how they bank their profits, how they cut their losses. This is where it gets a little bit harder to teach, but I'm going to do my best. I like to identify areas. If I'm in a short position, okay, I like to identify where are buyers going to be interested in this asset. I am short, which means I am selling. Where are buyers going to want to get into this position? Now, anywhere I identify where it's going to be attractive for buyers is an area I look to either get out of my position or get out in partial positions, okay? So key areas of price action, which you can just see where we've elevated multiple times. You can bring the session volume profile back into play and play around with it as we move forward, looking this at the daily volume profile. But these will be the areas I'll look at. So I always set my profit for very ambitious. For this circumstance, we probably could have aimed all the way down here. I'm just going to tell you right now, I would not have traded it right the way to the bottom, right? I'm going to give you that through and through right now. That wouldn't have happened. But we probably would have aimed for these lows around here. And then I would have identified multiple areas where buyers may have been interested to get into the asset. And I would scale out as we go. I very, very rarely move my stop to break even. Getting to break even, I rather like to take 50% of the position off in profit around here. Therefore, even if price reversed and went and hit my stop, it would get me out at break even based that I closed 50 here and 50 there, right? So that loss would just reverse everything I took off the table earlier on. It just gives my trade a little bit more room to breathe, and I prefer giving it more room rather than strangling it with a moving stop. Once again, it's getting very elaborate. Let's move on. So, stage 5, trade. We've found the position, we've analyzed, we like it, we've entered, and we trade it. And we've got different areas of take profit, 50%, 25%, full position. This would have been a great little position. While it says 2.71% risk reward ratio, we wouldn't have gotten that because I scaled it out quite aggressively. I usually average around a 1.2 risk to reward ratio, 1.2 to 1 that is. But I have quite a successful hit rate, which is why this is a profitable strategy. There you go. There's a simple trade. Now that was a passive entry. I'm now going to show you an example of an aggressive entry. And the beauty is this is on the 20th of April. We have another one on the other side. And this is a prime example that you can do this outside of the Asian session too, because this is as the London session begins. We do the same thing. The same markings are already out there for us, right? The volume profile markings, the volume profile markings are already there, right? They're from the previous trade we had. What we're looking for is an extension market, a push into one of these areas, a validation of drop in volume, and then the ability to trade it. So we get a push in value area. Very strong push, right? We broke the low of the day, we retested it, we continued on. We come down and we've tested into the area we like. What's really interesting is the last time we got a volume spike was in here. As you can see here, this little red, I know it can be quite hard to see. Let's zoom in so you can see it better. This little red spike was here and we managed to continue pushing down. However, volume also dropped in that continuation. So you can see trend was pushing down into the area. However, the volume bar also dropping. So it's telling me that sellers are losing interest. This right here would be an aggressive setup. As we push in, validated, great extension down into this very good area. Volumes dropping off. Really, really good setup. This could be an aggressive entry. As we tap into this value area, it could be a matter of just pulling a market order. Stop loss placement will be an iffy one. We can either put our stop all the way down here, which is most likely, or we can do a dual entry, okay? So we can have our stop all the way down here, but enter half the position, and then enter another half of the position at the bottom here once we test this area. You can be a little bit more aggressive, but that's all up to how you're feeling, your confidence in it, and everything else that can be in. We can also scale in as this pushes higher. But we take the market order, we're straight in, okay? And then we look for the key areas where sellers are going to be interested, right? So we flipped, we're now buying. So we want to look where sellers may be interested in selling this asset. And you can see these very key areas in price action where that would have been. And those are our take profit areas. We could have aimed all the way at the top, likely would have aimed all the way at the top, but you can see our multiple take profit areas throughout the day where we'll be scaling out of that position. That's pretty much the strategy as a whole. Now trade at level 6, all right, so we've done step 5 with trade. Level 6 is to review the trade. It's to get an understanding of how well did you trade it? How well was your entry point? How well was your exit points? Did you do it right? Did you do it wrong? Very simple, okay? This is your trading plan stuff, your trading journal, going back through how did you feel about the trade? Why did you do what you did? How did you position size it? What did you risk? How did you scale in? How did you scale out? Everything like that. That's step 6. I'm not going to dive into step 6 because we'll be here all day if I were to dive into step 6. And then finally, step 7, the beautiful one, my favorite, is what I call validation. Validation is very, very simple. We come back at the end of the day or the beginning of the next day and you look at the areas you drew based on the volume profile area, right? Your key strong areas, and you validate whether or not they worked. Well, looking at this, did this area work? Yeah. It's great little validation because we rejected it and we couldn't get through it. Okay, next area. Did it work? Yeah, we pinpointed the reversal point. Fantastic. Validated. Didn't get through it. Did this one work? Not so much. Not so much. Now, you can clearly see that we have some kind of fundamental data here, and this is deep into the US session. We're looking for lower volatility times, but we validate the areas in which we drew our analysis around to get an understanding of in current climate. So as we go tomorrow or the day after, whether or not our volume areas are validated or not, or whether we're in a high volatile time and it's not the best time to be going risk on. If we keep getting a high success rate of validation, you can go risk on, you can go a little bit more aggressive in your trades. There you go. That is my full trading strategy with 2 examples in the same day. There's not much more to it. Once again, it's really important. The edge in this strategy is bought in how you manage your position, where you get out, where you get in, how you cut your losses, how you cut your winners, how you let them run, scaling in, scaling out. All of that is where the edge is delivered. A lot of the strategies you'll see out there on YouTube, a lot of the strategies like this one, or even the moving average strategies, or whatever it is that you've been searching and seeing, they're simple, they're easy, they make about 10 to 15% of your whole trading, okay? Finding a trade and buying into it is the easiest thing anyone can do. Pulling profit from it is a whole nother level. That's where your edge comes from. This strategy requires an edge like no other. It requires you to be able to scale in, scale out, and understand the volume on a deeper level. Understand how the charts are moving and really be in tune with your assets. However, you asked for my strategy, so I delivered on my strategy. This is it. That's everything right there. That is how I trade across a load of different assets. And of course, sometimes there's opportunistic times where I'll take trades outside of this strategy, but will still generate profit, and I'll share those on live stream with you in the future. Guys, if you did enjoy it, check out my stop strategy jumping video. That's going to help you a lot to stop going from strategy to strategy when you're in trading, getting stuck in that vicious beginner's loop. Check out TradeDelicious, check out our other content. We do everything for free, so leave a like, subscribe, turn the notification bell on, and really get excited for what's to come from TradeDelicious. If you want to hear more from me, you want to hear from me on how to really build that edge and develop an edge, I'm going to be speaking live at Traders Day Live in London, June 17th. I'm going to be talking about edge, what it is, and how to develop one. So if you're interested in meeting me and hearing from me live in June, London, June 17th, I'll be talking live at tradersday.live. Use Jordan30 for 30% off gold and premium tickets, and I'll see you there. In the meantime, I hope you all do well in your trading, and I'll see you in the next live stream. Thanks, guys.